Hey guys, welcome to another 9 to 5 dividend investing video. I am Mike, and in today's video, we're going to be going over my 40K portfolio. Yes, guys, I've been waiting to do this video. I want to get the portfolio to 40,000 before we actually take a look at it. Currently, in this portfolio, we have 44 positions. We want to get it to 50 positions. Mostly dividend-paying stocks. There are only 2 stocks, and you're going to see them, that aren't dividend paying. And the reason I own these is that when I first started investing, I bought these stocks a little bit, and I don't have the heart right now to let them go. They're two big time growth stocks, and I'm gonna hold on to them for now. But one of them I'm thinking about selling. I'm not sure if I want to, but you'll see it. And yeah, guys, this is it. This is the video I've been waiting to do. 44 positions, 44 different positions. Again, it's a dividend portfolio. While the dividends get paid, they get reinvested back into the stock that pays it, except for the 2 positions. So technically, we got to get this portfolio to 52 positions to have 50 dividend-paying stocks in this one portfolio. Guys, I can't wait to show you this. But before we do, I am not a licensed professional. If you need help investing in the stock market, please seek a licensed professional. And make sure you like and subscribe. I really appreciate that. I really appreciate the comments. I love talking to everybody in the dividend investing community and everybody in the stock market community, everybody in any community. I just love talking to people. Check out my Facebook page, please, guys. 9 to 5 Dividend Investing. I am going to be on Twitter. I'm on Instagram. I'll link those down below. I shared a video when I first started doing some YouTube videos about my diversification of my portfolio. So I'm going to link that too below, so maybe you guys could take a look at that video and then take a look at this video and see how I changed, how the diversification anyway changed, because we're going to be going into all the stocks and how diversified the portfolio is. Some people may say that it's too diversified, but for me, it's perfect. And like I said, I like having different areas to invest in. I like learning about different areas of the stock market, whether it be into REITs, into materials, into consumer discretionary. I love everything. And each one, the numbers may all be the same, like current ratio or debt to equity ratio or any PE ratio, but each sector, each ratio means something different. Some may be higher, some may be lower. So it's really hard when comparing different sectors. You always got to try to compare like a Comcast to a Disney, because they're pretty much in the same field. Like Universal Studios Park is owned by Comcast. Disney owns Disney Parks. So you got to try to keep them the same. So guys, I'm going to take a look at the portfolio now. So dividend invest. Guys, here it is. We're going to start here. Diversification. This is how my portfolio is diversified, and just for your knowledge, and I'm going to leave a link also for this in the description. It's a great website, helps you keep track of anything you invest in. SimplySafeDividends.com. I love this page. Yes, it is a subscription you have to pay for yearly, but I think it's totally worth it, especially when you get a portfolio that you start diversifying, and when your portfolio gets kind of large and you're diversifying into what I want to do, 50 dividend paying stocks. This is what kind of happens, and I need this, and it helps me keep track of my portfolio. Guys, again, check it out, SimplySafeDividends.com. I'm going to link it in the bottom in the description. Anyway, so let's get started. Number 1, we got less than 1% of the portfolio in utilities, 2% of the portfolio in materials, 2% in real estate, 5% in energy, 5% in consumer discretionary, 6% in financials, 8% in consumer staples, 14% in healthcare, 18% in industrials, 18% in communications, and 21% of the portfolio is information technology. So guys, as you can see, I'm kind of heavy in information technology. I would like to bring that down a little bit. I am looking for some more utilities, materials, and real estate to invest in. I would like to have everything. I don't want to say everything, but I would like to have everything minimum 5% of my portfolio. So I am kind of heavy in information technology, so let's just get right into it right now and check out all the stocks that I own in my 40K portfolio. First off, we have utilities, which is less than 1% of my dividend and grow portfolio. Yes, you can nickname your portfolio here too. That's what I nicknamed it. First, we have here PPL Corporation. What I love about this website too, Simply Safe Dividends, it tells you the dividend safety score for all your positions. Great, great, great tool. So much information on this site. Please check it out, simplysafedividends.com. Again, it's less than 1% of my account at 0.7%. I have a market value of $299. So far, since I've owned this position and I've added to it over time, whenever it dips below my cost basis, I dollar cost average in, like I always say, I'm up 21.1% with PPL Corporation. Again, it's only $300 about, and they have a dividend yield of 4.52%, and that's the 5-year average. Next up, we have the materials at 2% of the dividend and grow portfolio. We have the WestRock Company and Albemarle Corporation. With WestRock Company, they have a 51% dividend safety score as per Simply Safe Dividends. Again, link down below. Check it out. 1% of my account. Market value for WestRock is $423. I am up 8.9% there, and they have a 5-year dividend growth rate or average yield at 4.54%. Albemarle 99% dividend safe. 0.6% of my account, $244, and 6.6% gain there at a dividend yield of 1.81%. Next, we have real estate. Only one position in real estate. That's Simon Property Group. As we all know, Simon Property Group is a mall REIT. As you can see from here, I am currently down 1% there. So they may be a buying opportunity there. Since I am down, we'll have to see what Monday brings us. But as you can see, it does have a dividend yield of 5.80%, a 5-year average. Market value currently that I have in there is $877. Next, we have energy, 5% of the dividend and grow portfolio. We have BP, Marathon Petroleum Corporation, and ExxonMobil. ExxonMobil is a very large part of my energy sector with $1,083. I recently just purchased more. We're going to be going over that in an upcoming video. I am down currently in ExxonMobil at 4%, hence why I purchased more. As you can see, BP safety score, though, is only at 46 as per Simply Safe Dividends, but I like BP. These, generally, the energy / oil corporations have a higher dividend yields, and this is where a lot of my money comes from that I get from dividends, but yet they get reinvested right back into the company. So there you go. That is 5% of my portfolio in energy. Next, we have consumer discretionary. Here we have Leg and Platt, and this is one of the positions that I currently own that I've owned for a long time. Alibaba. I started buying Alibaba, and I do have a 37.6% gain on Alibaba, which is pretty high. They do not pay a dividend, as we pretty much know. They are 3.5% of the account, which is a decently sized portion of consumer discretionary. I was actually thinking about selling Alibaba, but Alibaba is such a great growth company, and I know they're probably not going to pay a dividend, but I own them. Yes, I know this is 9 to 5 dividend investing. I know it's not a dividend stock, but there you have it. Also, Leg and Platt, 61% safe dividend, market value $672, and gain of 40% on Leg and Platt. And of course, their dividend yield, or 5-year average dividend yield, is 3.14%. Next, we have financials. And as you guys can see, they are 6% of the dividend and grow portfolio. Let's get them all here on the screen. First up, we have the brand new position with a dividend safety score of only 45, but I saw an opportunity and I had to take it. Brand new, starting the position. And guys, when I start new positions, I like to take a minimum of $250 and buy as many shares as I can with that $250 to start the new position. Over the course of time, then, I may only buy small amounts of that stock at a time, or sometimes large amounts, but usually when we start a new position, it's at $250. Next, we have Prudential Financial. We did a video on them. I'll link that below. JP Morgan Chase, of course. Bank of America, Charles Schwab, and Aflac Corporation. As you guys could see, Schwab and Discover, kind of both new positions. Discover, definitely a brand new position. Both I'm down on. Both, I believe, have more buying opportunity. And Discover, for sure. Schwab, thinking about it. But as you could see, in my financial sector, I have cash very distributed amongst these 6 stocks. I don't believe I'm going to be buying any more financials. 6 positions are ones that I would like to grow out a little bit more. I believe that it's very diversified, whether it be with insurance, banking. Next, we have consumer staples at 8% of my dividend and grow portfolio. We have ticker symbol MO at Altria Group, one of the biggest positions in my portfolio. 3.3% of the account, market value of $1,400, and I've been up almost 5% with them. Next up is Clorox, ticker symbol ADM or Archer Daniels Midland. Then we have SJM or JM Smucker Company or Hormel Foods, ticker symbol HRL. And as you can see, Hormel, I've been up 21%. None of these I'm really buying right now. I'm kind of waiting until they drag down a little bit more. Clorox is the only one that I've been buying recently. So there you have it, guys. That is my consumer staples. Next up, we have the healthcare sector at 14% of the dividend and grow portfolio. We have ticker symbol ABBV or ABIV, CVS Health Corporation, ticker symbol PFE with Pfizer, BMY or Bristol Myers Squibb, and J&J, Johnson & Johnson. As you guys can see, I am up quite a bit in the healthcare sector. I started buying ticker symbol Ambev when they purchased Allergen, and the market didn't like that so much. I did, so I started buying them there. I haven't bought really too much more in the healthcare sector right now. The only one that I'm thinking about buying more is if it dips a little lower is Pfizer. As you can see, I don't have such a big gain on Pfizer, only 6%. Otherwise, this is my healthcare sector at 14% of my portfolio. Next, we have the industrials, which is 18% of the dividend and grow portfolio. We start off with ticker symbol DAL or Delta Airlines. Next, we have UPS, United Parcel Service, ticker symbol 3M or MMM, ticker symbol CHRW or CH Robinson Worldwide, CAT with Caterpillar, ticker symbol UTX, United Technologies, love them. Ticker symbol GD, General Dynamics. Ticker symbol LUV or Southwest Airlines. And finally, ticker symbol AOS with A.O. Smith Corporation. A.O. Smith is the only one I'm down on there. And they, I believe they're a buying opportunity right now for me. And we're going to see what Monday brings again. But as you guys could see, the only one that I'm not up so much is CHRW and AOS, which I am down on. And guys, yeah, this is my portfolio. I try to diverse, like I said, industrials, 18%. Next, we have the communication sector. And this is where the other non-dividend paying stock is, with Facebook. Started buying Facebook a while ago. They are 9.3% of this portfolio, $3,923. I am up 38.7% with Facebook. I don't and I can't sell them right now. I don't want to sell them right now. I believe Facebook has more room to grow. I started buying Facebook back when it was, I think, in the $150 range, and I just can't sell it. Don't want to. We also have Disney here, 99, very safe dividend, 6.3% of the account, $2,678, 26.2% gain with Disney. Started buying Disney when they were under $100. Very thankful I did. Wish I bought them more heavily. And though they only pay their dividend bi-annually, hope I'm saying that right, but twice a year, I still wish I would have bought more Disney. Love this company. Love it, love it, love it. Maybe once I get to my 50 different stocks, I'm going to then stop buying Disney in another portfolio so that I don't see my cost basis go up and it doesn't hurt as much, but we'll see. Again, also here's AT&T. Love AT&T, 27.6% gain with AT&T, 5 year of 5.40%. Again, I'd love to buy more AT&T, just I feel like I'm up too much with them and it wouldn't be worth it for me to buy them right now. Finally, at 21% of the Dividend and Grow portfolio with information technology, we have ticker symbol GLW, or the Corning Corporation, ticker symbol TXN, Texas Instruments, Cisco Systems, CSCO, Intel, Visa, Apple, Microsoft. This is the largest part of my portfolio, and as you can see why, there's some of the names in here between Microsoft, Apple, Visa, Intel, which just had a great day and is now up 43.5% with Intel. Apple, I'm up 70%. I would love to buy more of these companies, great companies, well-known companies. I am up a lot with them. I'm up 57.4% with Microsoft. Still trying to buy more Cisco Systems right now and Corning. Corning Corporation, I believe, is a grower and will continue to grow, but that is 21. Information Technologies is 21% of my Dividend and Grow portfolio. So guys, there you have it right there. $42,720 portfolio, my 40K portfolio. Yes, we're going to grow it and keep growing it. We're going to put in some more dividend paying stocks. Only 2 growth stocks. I don't have the heart right now to sell them. I believe they have much more room to grow. And yes, I do consider myself a dividend investor, but we do have a couple growth stocks in there between Alibaba and Facebook. But guys, that's it. That is my portfolio. Please like, subscribe, comment below. Do you think I have too many positions? Do you think I don't have enough positions? Do you like my positions? Let me know. I'm going to link down in the bottom, Simply Safe Dividends, for anybody that wants to check it out. Awesome website. Awesome way to keep track. And again, it is a subscription. Make sure you check out my Facebook page, my Twitter, my Instagram. Guys, that is my portfolio. I love sharing these things with the online community, with everybody on YouTube, all my friends, all my family. Thank you so much, guys, and keep it here for more dividend investing videos, and dividend invest.